Hello everybody, you're probably wondering why I have so many bank accounts. Okay, these are not all my bank accounts. I just managed to just get what I can for this video. And before I explain why I have so many bank accounts, I need you to smash that like button for the YouTube algorithm. And most importantly, watch the video from beginning till end or you'll just be missing out and the whole video won't make any sense. So I hope to see you at the very end. Alrighty, so there's 7 reasons on why I have multiple bank accounts. Reason 1 is that each bank account or each bank has a maximum insurance limit. Okay, so in the United States, it's $250,000, so $250,000. And in Canada, it's $100,000, so 1/10 of a million. And with that being said, it doesn't insure everything. It only insures cash deposits, meaning like a checking account, a savings account, a CD, or a GIC if you're in Canada. It does not insure like stocks, bonds, mutual funds, or anything else in that nature or that realm. It's mainly just cash. With that being said, in the United States, foreign currencies are actually insured, but very few American banks actually accept other currencies other than US dollars. However, in Canada, there's many banks that accept US dollars along with like other currencies. So those currencies are not covered if you're in Canada. And since I'm in Canada, I don't like the fact that my US dollars are not insured. Not that I'm scared that anytime soon Canadian banks are ever going to fail. They're pretty stable. I think more stable than US banks, but I don't know. Let me know in the comments down below if you think Canadian bank accounts are more stable or US bank accounts are more stable. So I bet everybody's wondering, well, Mike, I don't have $250,000. I don't have $100,000. This doesn't apply to me. Well, eventually you're gonna get there because you know you're watching this video. And 2, it's not necessarily about the fact that the coverage is this limit. When this does happen, like a bank files bankruptcy, it's a process. It's not immediate that you get this money. It's immediate when the bank officially files bankruptcy and the bankruptcy is fully processed. But before that, you may not be able to get access to those funds and you may need those funds. So in general, it's better just to diversify and open up another bank account at least. That way, if something bad happens, you have access to those funds. So reason 2 is access to multiple ATMs without needing to pay fees. Back in the day, especially like 15 years ago, a lot of merchants, meaning like stores and retailers, they didn't really accept credit and debit cards as they do now. Almost everything was cash-based back then. Like things were starting to get in the groove of, hey, let's accept digital payments, or hey, let's accept these card payments. But back then, very few stores did, and especially stores that were targeted at like people of not wealth in a way, which was me back in the day. And so, you know, to go to like this dollar store and purchase something, or to go to this convenience store and purchase something, or to even buy food from this store, I would need cash. And I got very upset that I couldn't find the ATM for my specific bank or specific bank brand. And if I went to another bank brand, then what they will do is they'll charge their fee. So let's just say I have a Chase account, I go to Wells Fargo. Wells Fargo is going to charge me their ATM fee, and then Chase is also going to ding me another fee. And back in the day, these fees were even higher and money was worth even more. Okay, so if you got dinged $6 to withdraw $20, I'm like, you're losing a quarter of your money just to get access to it. So that made no sense to me. And not only that, there's also these like super third-party ATMs. There's like these little tiny old user interface machines. You still see them around and they charge even more fees. They tend to be $5 to $10, and then your bank will charge another $2 to like, I don't know, $10. So, you know, that would be like almost $15. So unless you're gonna withdraw like $1,000 or something from the ATM machine, it didn't really make any sense. And I noticed this more often like in a club where you're kind of stuck and you have to, you know, go to this little ATM that's basically hustling you. So I didn't want to deal with any of that. By having access to multiple banking brands or having accounts at different financial institutions, I just had access to way more ATMs and I never had that issue anymore. Okay, on one block I got Wells Fargo. On another block I got Chase. On another block I got Key Bank. On another block I got BMO Harris, okay? So in that way, it protected me from that. But nowadays, you know, almost debit and credit cards are taken like almost everywhere. I know there's still a few stores that don't accept digital payments payments or card payments. However, especially with COVID-19 happening, people are pretty much just paying with credit cards and debit cards these days. So cash payments are pretty much coming obsolete, and I think it's going to become super obsolete soon. I don't know when, but I'm pretty sure soon it's going to happen. So this reason 2 was a big one for me, especially back in the day, because I would save so much money. Nowadays, not as big, but that was one of the main pushes for me as a young boy. I was literally 13 years old where I'm like, what? You know, I only had $50 in my bank account. It didn't make any sense for me to go to another ATM at a different brand and get double dinged fees just so I can get $10 or $20 out and buy lunch. Okay, so it made no sense. So reason 3, instant access to large sums of cash. Most banks, when you go withdraw money, whether from an ATM or in branch, there's a limit and you can't go above that limit. They just won't allow you. Like, rarely will they allow you. Usually the ATM is a lot less than in branch. Let's just say ATM is $600, in branch is $2,000. Now, this may not be the case for you. And back in the day, these amounts were even lower simply because money was worth more back then than it is now. And so for me to withdraw like $5,000, I remember once I needed $5,000 immediately because I used to buy used products and everything would be cash based. And I needed to make the purchase like tomorrow. And you know, it's 8 p.m., the bank's not open, there's no customer support line working right now. So there's no way I can just call and be like, hey, can I withdraw this much money? Because you will need to call before you actually go to the bank to withdraw your money. Okay, if you go to the bank directly and be like, hey, give me $6,000, you're gonna be rejected. They're gonna say no. They're gonna say, here's $2,000. You could possibly go to another branch and they may give you another $2,000, or they may reject you because it can clearly see that you already withdrew $2,000. And so for me not to deal with this, I realized, oh, it's just better that I split my $20,000 among 6 accounts. And that way, if I ever do need an instant access, like literally a 24 access to $20,000, I can do so. I don't know, there's a pandemic happening, there's a nuclear fallout happening, or there's a business deal that I need to get done tomorrow and I need this money and I can't get it because the banks are delaying me. Okay, so this is something that banks do all the time and it's for our safety. I get it, it's your money, it's your $100,000, it's your $1 million, it's your $5,000, whatever the amount is. They do it for your safety simply because having cash on hand in a branch could get stolen. And when cash gets stolen, it's very hard to retrieve. And nowadays, bank heists are not really a thing. Anyone that robs a bank, in my perspective, is either a really young kid or not the brightest tool, because you cannot go into a bank and be like, hey, give me $100,000. They just don't have that money in the branch. Okay, this isn't new. This has been for the longest time. And so, yeah, so by having access to multiple bank accounts, I get access to multiple limits. And with those multiple limits, I can get the amount that I want. And at the time, the max I really ever needed within 24 hours was $20,000. I think that's a good amount of money if you ever need it just like that, right? If you ever need access to this much money because something emergency-wise is happening, whether it's like a business-related thing or a personal-related issue, you can get that money immediately. So you would be like bank 1, 2,000, bank 2, 2,000, bank 3, 2,000, bank 4, 2,000, bank 5, 2,000, and now all of a sudden you have access to $10,000. And all you really had to do was drive or walk to these ATMs or in branch and just wait in line. And I know within 24 hours you can get that money. However, if you went like today and say, hey, give me $10,000, you're gonna get rejected. I know this because it happened pretty much every single time. And I didn't want to ever deal with that if I ever need cash to buy certain things now. So next, so reason 4, banks are literally ran by people, okay? It's just average Joes doing average Joe work in my perspective. And I don't mean any disrespect to a bank teller in any way, but a bank teller is just a human being and they get to see your name, they get to see your address, they get to see your phone number, they get to see the amount of money you have, they get to see what your deposits and where you spend it. In my perspective, majority of the time, they kind of just glance at things and move on. However, I noticed the moment there is an X amount of dollars in a bank account or X amount of deposits in your bank account, they start asking questions, especially when you're younger too. But in general, it doesn't even matter about age. I just personally remember a story when I was 15, I had a couple $1,000 deposits. And again, I was selling products on eBay and the money was going into my personal bank account. And these $1,000 coming in are just not all profit. So like this $5,000 may look impressive, but those are not like the full numbers. And you know, this individual that was working at this bank was suddenly, you know, having a conversation with me about these deposits, about what I'm I'm doing. Like none of this conversation was for verification on my identity or anything. It was simply out of self-interest of the individual, the bank teller. And I knew why he was interested. I was a young person and they see this many dollars getting in one day and they're like, what? He's making more money than I am in the whole month. So I get it. The issue that I have is I want this to be a 2-minute thing and not a 30-minute conversation. And not only that, I want to keep my business private, what I'm doing private. So many people do that, right? Especially if it's profitable. They don't really want to expose what they're doing, especially in the beginning when they don't have their copyright trademarks, when they don't have their patents, when they don't have, all the systems in place to protect their IP in a way. And, that kind of annoyed me. And not only that, I remember 2 years ago, again, I had X amount of dollars in one of these specific bank accounts. This was more of a casual average bank account. And the lady immediately asks me like, so when are you gonna buy a house? You have this much money in your account. And I'm like, why are we talking about purchasing a house right now? I don't care to buy a house. I literally just want this much money out of my account and I need to go, right? So I realized by diversifying my money in multiple bank accounts, I actually get very few questions asked because it makes me look poorer than I really am. So if you have like $10,000 in one bank account, people see that. But if you put $10,000 into 5 accounts, they only see $2,000. And the same thing applies if you have, let's say, $500,000. If you put $32,000 in each bank account, that makes you look poorer than you actually are, and you're gonna get less questions, and you're gonna get less people being a little, a little bit, I don't know, a little bit on your tail in a way. So I personally did not like that. And you'd be like, well, Mike, so what do you do with large banking? Who do you bank with? When it comes to stocks and stuff, I use online platforms, and I never had an issue with online platforms. And then when it comes to cash, first I pick one bank and I go to a branch that is more in a bougie area with very few people going there, and that people understand money better, and let's say have access to more cash. Someone who has $5 million is not really that impressed someone that has $100,000 in a way, right? It's kind of just like whatever to them. Now if you have $100,000 and you go to a person who only has $1,000, things get a little bit, asking questions too much kind of thing. So I didn't like dealing with that. So you would just go to a better area. You would go to people that deal with higher banking or people who have more money, and you'll get less questions asked and you would get the stuff done properly. And so that's why I did it majority of the time, simply because it made me look poorer than I actually am. So reason 5, by building multiple banking relationships, you are actually building multiple insider scores. Now on my left, I actually made a video on this fully explaining it. I recommend checking it out after this video, again from beginning till end, and it will fully explain what I'm talking about. With that being said, I'm going to shortly explain it right now. And so by having an account at a financial institution, you are building that insider score. And this insider score is based on the X amount of accounts you have, X amount of money you have in total in all your accounts, how long you had your first account at that bank, and are there any like derogatory or shady behavior happening on your account. And this could be like checks bouncing, a lot of overdraft being used, fees not being paid, etc. As long as you keep your bank account and your accounts at these financial institutions in good standing, you get these check marks on your insider score, which then allows the bankers to send out pre-approvals or access to better services, better products, and or better interest rates. This means you can get pre-approved for basic credit cards, premium credit cards, larger increases on your credit limit, easier access or easier approvals when you do sign up for a specific service. So like you apply for a mortgage, you're more inclined to get approved than the person who doesn't bank at that institution. And this happens at every bank. It doesn't matter which one. They all have some sort of insider score where they determine your value as a client. The more valuable you are as a client, the more they're inclined to giving you better offers. And so by having access to multiple bank accounts, you get access to multiple bank insider scores, which means in a way access to multiple lines of credit, credit cards, and this also extends to your business, which means you can get an easier time getting either pre-approved or approved for a business credit card, a business line of credit, a business loan, a better interest rate. So it applies to both your personal and business life. And literally this is how I grew my personal credit line to like $1 million plus in a way, is that I just built relationships with multiple banks, which then just pre-approved me for a lot of credit cards and eventually just got get pre-approved for larger credit limits without them even bothering sometimes to even check my credit score or my credit report, or they wouldn't even bother doing income verification, because some credit cards, they say that you need like a $50,000 a year or $150,000 a year, and if you don't have that income requirement, you actually can't apply to that credit card. But by having an insider score at a bank, you're more inclined to actually getting all those things waived or ignored and just getting the card directly to you. And again, it's not just credit cards, it's like I said, loans, financing, car financing, better interest rates, better mortgage rates, and more. So reason 6, and this reason, I kind of explained it in reason 1. If a bank goes bankrupt, it's probably wise to have a second account. That way you have access to at least some funds while the funds in bank 1 are getting resolved through this bankruptcy issue. So reason 6 is backup. By having multiple bank accounts, or by at least having 2, if something happens to your first bank account, whether your card is not working properly, the magnet gets screwed up, the chip gets screwed up, you can then use your second card and get access to the funds on that card. Or if your account gets compromised, like if someone hacked it or the teller thinks someone hacks it, a lot of times your account gets deactivated, and the only way you can actually undeactivate it is that you may have to come in person. And imagine you're all the way, I don't know, in the Philippines, and your only bank account gets compromised, and they're like, the only way we're going to resolve this issue is for you to come in person. And this happened to me. I was in Eastern Europe, and one of my main banks actually said, yeah, your account has been deactivated. It's not that we're holding your funds or anything. Everything is fine. It's just for your safety. And most people would get really upset. However, I knew this. I had access to multiple bank accounts by this time already. And I'm like, okay, when I get back, I'll deal with it. And yeah, when I got back, it was easily dealt with and the account was activated again. So it does happen. And so by having multiple bank accounts, you have a backup, okay? At least 2, okay? At least 2. So reason 7, a lot of banks actually give out bonus promotions, and most of these bonus promotions revolve around high interest. Whether it's a high interest savings account, a CD, or if you're in Canada, a GIC, then by having multiple bank accounts, especially at bank accounts that do these offers, basically, if you know a bank or financial institution that has already done this offer a couple of times, most likely they'll do it again next year. However, usually these high interest bonus promotions are not forever. They're not for 5 years, or they're not for long-term periods. It could be anywhere from like 3 months to possibly 3 years. On average, it's like 6 months to 1 year. But when you have access to multiple bank accounts, you can be like, okay, I'm going to take advantage of this 3.2% high interest savings bonus promotion for 7 months. And then hopefully, 7-8 months pass, and all of a sudden this bank account's doing another high interest bonus promotion. And then, you would just easily transfer it from bank A to bank B, and then bank B to bank C, and then bank C to bank D, okay? And then basically you have long-term high interest savings. Well, right now with the whole COVID-19 thing happening, there's very few banks actually giving out high interest on savings account or even with CDs or GICs. However, I know once this pandemic's over, these bonus promotions are gonna happen again, and Stephen Graham's gonna make a video every other day saying how Ali Bank is now at 5% and how Chase is now at 3% and how Bank 3 is at 7%, even though 7% is incredibly high. It's usually max like 3%. Anything to me higher than 2% is pretty darn good. So that's another way to take advantage of it. And there's also these other bonus promotions that they do. I don't know anything on the top of my head, but by just being a partner at this bank, meaning by having an account, you're just going to be on their email marketing list, and then they're just going to send you some random offers and stuff. And again, this revolves around your bank insider score, and this also includes things like pre-approvals. And so that's why it's also wise to check your email, letters, and also the online banking of your account. That way you can see the notifications on your account, because when you go on online banking, they do put notifications on your account, or there's like a little area for offers or for promotions, and you would just click on that area and they'll show you what they can give you today. And like I said in my previous video on the insider score, I mentioned that you should be doing this slow and steady in a sense of opening up bank accounts. Most people are not really that organized, okay? I'm not saying that you aren't. I'm hoping that you are, because you are watching this video and you're watching it from beginning till end, that you're gonna understand that it's important to organize it, right? Each bank account has its own terms and conditions, right? There's paperwork. Keep that paperwork. paperwork. Document it, either physically or digitally. I don't know, use some type of cloud service such as Google Drive. 2, each account has online banking. You must use online banking. I don't know how you're going to do this without online banking, because waiting in line for 30 minutes at each bank account is going to be so time consuming. And so you would need to be up to date with your passwords and your security questions and possibly anything else for you to verify. So figure out a way on how to organize that. There's a lot of password managers out there. You could use those. LastPass is one that you can use to manage your passwords. And also you want to be secure about it, right? You want to use secure passwords. Basically, you want to use secure passwords, not your dog's name and 1 at the end of it. You know, make it more discreet. And so it's important to do this slow and steady. That way you can have your bank accounts organized, your data organized, your online banking organized, your passwords and security questions organized, and have everything secure and have no issues. Because if you sign up with 10, 20 accounts within 2 weeks, I highly doubt you're gonna get anything organized, okay? Like, I didn't do this stuff in like 2 weeks. And if you're new to this, I wouldn't say that you could even do it in 2 weeks at all. So I recommend just slow and steady, open up just 2 accounts for now and organize those and read the terms. And then from there, you can then add more, okay? Start slow and steady. And I really recommend watching the previous video that I made, because I then talk about that some bank accounts do credit checks and how you can prevent it. And some banks in the United States only, this is a US thing, have a banking bureau called the check system. And so I mentioned in that video too. So I really recommend that you watch that video too before you open up your bank account. So that's the end of me. I hope everyone liked this video. Don't forget to like, subscribe, and hit that bell notification. And check out the video description down below for links that are vital to you and your banking, credit, and financials. This is Mike signing out. Have a great day, everybody, and stay strong.